Bitcoin emergency update. The probability is sideways to down over the next 4 to 8, maybe even 10 weeks based on momentum, pattern, and price. The three best ways to read the market. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to trade currencies, but now exclusive on cryptocurrency. So let's dive straight in. So what we're aiming to do here is a very objective, non-emotional, mechanical analysis of Bitcoin. 2017, we saw this nice run up, big correction, and the markets tend to move in fives and threes. And Elliott wave is one of the best ways of reading the markets. And we can see this nice, clean 5-wave structure to the upside for what looks like a wave 3, and it looks like we are forming a wave 4. What I want to focus on today is the immediate momentum. So one of the best ways of reading the markets, there's a great saying, the trend is your friend, ride it until its end, until it reaches its bend. So right now, if we zoom in, we've got a bit of detail over here, we can see that the immediate trend overall has been down. For a few weeks it's been up, but this is more of a corrective structure. That'll make more sense in a second. We want to see what is likely to occur next. And we're looking for clues, because we can only do probabilities and never certainties. So one of the best clues that we can get is a momentum indicator. So I use something called the stochastics RSI. So I'm going to look at a weekly chart. And in very simple terms, it's basically when the blue line is below the red, it means the market should be sideways to down. The price will tend to correlate, and we can test that as well. And we've had this blue line go below the red line over here. So now we should anticipate that the probability is Bitcoin is going to be going sideways to down. Yeah, 4 weeks, 8 weeks, maybe even 10 weeks. But by itself, momentum is not enough. We want to also look at the pattern position, because again, the markets tend to move in fives and threes. Threes tend to be the correction, and five tend to be something called an impulsive wave. So when we're looking back on the daily chart with Bitcoin, because of that momentum indicator, the probability is actually we're going to go sideways to down. How far down? That's what we're going to look at today. And again, if you want to get this edge on the market by really understanding the psychological mood of all the people participating, because the price tells us very valuable information, take my free Elliott Wave and Fibonacci Masterclass. It's in the description link below. You'll get immediate access. Just click this link. You'll be taken to this page. Show me how. Boom, video on demand. And I'm going to give you my best secrets. The main 3 things you need to know is the 3 Elliott Wave rules that help you read the markets. And with practice, it'll become second nature. But you do need to start somewhere. And the Masterclass is a great place to start, because it'll give you a very high-level overview on Elliott waves. So now with Bitcoin, what we're going to do, just going to zoom in over here. We're going to zoom in like so. We're going to just delete these over here. So the key thing that I want to make really, really clear today, let me just put this back in, hold on, is what seems to be the case over here is we've clearly had this movement to the downside since November last year, and that's quite impulsive to the downside. And then we've had this movement to the upside. And one of the greatest things with Elliott waves is it can tell you with high probability, is the market impulsive in terms of it's making lower lows, or is it corrective and the waves are overlapping? So this over here looks like an overlapping wave structure, which is a typical sign of a correction. So it's likely that this may be the top of the correction, combining the momentum that we saw on a weekly chart. So when we see a very clean correction, it's pretty clean over here, A, B, and it looks like a C, then we should see a continuation of the former trend, right? So the probability is in the favor. There's no guarantees in this game. We can only go with the edge, and that's the whole idea of becoming the casino. In our world, in traditional world, we have casinos, and the casinos tend to win. The house always wins. Why? Because it has the edge in its favor. The games are favored towards the casino. Doesn't mean they never lose. It just means they're favored. And what we're looking to do with technical analysis is get the edge in our favor, so the probability of us winning and getting it right increases. So the likelihood is we're going to see a lower low being made and hitting this region down here. And on a macro picture, just so we're all on the same page, on a macro picture, what I'm seeing is a potential completion of a wave 4. And after a completion of a wave 4, which will be a bit of a panic for the market if it does unfold like this, then going on in the second half of 2022 to go on to make all-time new highs, whereas with a lot of strength in Bitcoin, which will be a lot of optimism in the entire market. Obviously, it will be in sequences on the upside, but when that occurs and if that occurs, we can evaluate. But what we're going to focus on right now is this part of the market. What's happening and what does it look like right now? So right now, what I'm going to do is I'm just going to zoom in over here. I really want to zoom in right over here because there's some important information based on the pattern position. First of all, this looks like a nice 1, 2, 3, 4, 5 wave structure to the upside. And then initially, this was potentially going to look like a correction. But because of the way it's unfolding, I'm just going to get rid of these lines for a second. I'm just going to leave the numbers there. And I will also I'll get rid of this for a second. What this looks like to me is a trend reversal because of this quite impulsive move to the downside. So what's likely to happen over the coming days is we're probably going to see some upward movement, but it's more going to be a corrective movement, more than likely, and then a further move to the downside. And that's what I'm drawing out here. We can see that. What's another confirmation that's likely to happen? Well, it's the daily momentum. The daily momentum is bullish, and that will probably coincide with a wave 4. And then we should anticipate a lower low being made. And that will probably coincide with another bullish reversal on this side over here. And then last but not least, we should anticipate a retest. If it does occur like this, we should anticipate a retest of this over here. But this, again, we should anticipate it to be a correction. And then the next move to the downside, because the weekly momentum is down, might be quite aggressive. So we might have maybe a week or so, 3 to 5 days before we see something like this. And if it does occur like this, I just want to be hyper aware of what that means for the rest of the markets, because especially the low caps, it can be quite shocking to the rest of the market, to say the least. And then last but not least is to actually anticipate something along the lines of another correction to the upside and then a final move to the downside. If it unfolds like this, this could be the end of this corrective wave 4 on a macro picture. So when I just zoom in again, by the way, everything is difficult before it's easy. Everything is difficult before it's easy. When I first started to learn Elliott waves, none of this made any sense to me, right? It just looked like random lines. So don't expect it to just make sense overnight. It takes a bit of practice. It takes like looking at the charts over and over again with different coins. But with practice, it does get like driving a car. It gets easier and more identifiable. And that's why I've created the free masterclass. If you click the link below, you can pause this, just get a high level overview of how Elliott waves tend to unfold on a high level and how it combines with Fibonacci ratios. And then coming back over here, this will start to make more and more sense. So what I wanted to finish on was, if it does unfold like this, and this is the end of a wave 4, this is where you want to be hyper aware that we might get the continuation of this bull trend that we've been having since really the beginning of 2017, with obviously major ups and downs in between. And we may go on to see a 6-figure Bitcoin. If we do, that would be a lot of optimism for the market. And I believe that's going to occur in the second half of this year, after June, mid-June possibly. So sideways to down until June, unless, the whole art and the science of Elliott waves is you have a wave count, but you have a set rules. And in the masterclass, they cover the set rules. There's 3 set rules that Ralph Nelson Elliott figured out. Is if we see the price go above this point, and there's all of a sudden some serious optimism in the market, then we'll need to reevaluate. But until that happens, the probability is sideways to down. I've been telling my community this, my private community, people that have bought my courses, you get an invite to my private Telegram. We do weekend workshops and a bit more access to just doing technical analysis on different coins. Some of the people in the community was, I hope you're wrong. And I said, me too. But the probability, if we put our biases to the side, the probability is the momentum's down on the weekly. The pattern position is an ABC, which is what we're referring to over here, this ABC. And then if it does end up being an ABC with these Fibonacci ratio zones, the typical most common is there will be a continuation to the downside, making a new low below this point, which means $31,000 to $35,000 Bitcoin might be on the cards. So it's just to prepare, and you can best prepare because most individuals lose in this game of crypto tennis because they're 2 steps behind the market. And what you're aiming to do is get 1 to 2 steps ahead of the market so you can anticipate. There you have it. There you have it. So if you like today's content, like, subscribe, hit the bell notification. Take the free Elliott Wave Fibonacci Masterclass. Put a lot of work into this. And if you like it, let me know. How did you find it? It'll just give you a real high level. Just click yes, show me how. It'll ask you for your email, and you'll get instant access straight away. So there you have it. There you have it. All right, we're going to finish on a quote today from my book. We're going to go with chapter 3. Chapter 3. It is Confucius. It does not matter. It does not matter how slowly you go, as long as you do not stop. Learning anything, if you drive a car, you can probably remember the first time you drove, it wasn't intuitive. The clutch, the gas, the gears, the mirrors, all these things going on. But now you probably do it as if it was second nature. You don't really need to think about it. And that will happen with Elliott waves as well. With practice, with looking at, hours and hours worth of charts over a sustained period of time, because crypto's here to stay. Blockchain technology, all contracts in the physical world are going to move over to the blockchain in the next 5, 10, 15 years. So this token economy, this utility, this new thing that's never existed before called blockchain, decentralized finance, DEXs, insurance, mortgages, all this stuff is moving over to the blockchain. A lot of innovation happening. So it's good to be able to read the psychology of the buying and selling behavior, because most individuals think it's all the fundamentals, what the company's doing, what the project is doing. But what Ralph Nelson Elliott figured out, whether it's stocks, whether it's commodities like gold or oil, whether it's the currencies like forex markets, the pound versus the dollar, the Canadian dollar versus the Australian dollar, it was literally shown that it's all human psychology. Buying and selling is based on fear and greed. And what we're talking about here is momentum, pattern, and price that helps us measure the sociology and the psychology of the market, which gives us the probability to see what's very likely, as in highly probable, to occur next. So therefore, you can make business decisions based on objectivity, non-emotional, and mechanical. And if you can do that consistently, then you got a higher probability of winning in this game. So like, subscribe, hit the bell notification, take the free Elliott Wave Fibonacci Masterclass. Enjoy it, watch it a few times, take some notes, because I cover the 3 key rules, the 5-wave structure, the 3-wave corrections, and a few other bonuses within there with a few clever examples. So then you can start to really get this insight into the markets. All right, I'll see you very soon.